So, are you self-employed? Have you ever thought about getting a home loan? Do you know that there's some special programs out there just for you? And we have our professional special speaker here today, Jonathan Caguioa with Allianze Mortgage, and he's going to give us all the details, step by step, as to things that you self-employed future homeowners need to know. So I'm going to turn this around. Hey, Jonathan.
Hey, Carol.
Great. So let's talk about who the program is for.
Sure. It's for self-employed folks. And, self-employed people, they're kind of unique borrowers. It's a unique species of borrowers because they have a lot of tax write-off available to them, expenses, this and that, their business. And self-employed people don't have regular income like, normal folks do, wage earners and all that.
Kind of like me.
Yes, right. And myself as well, right?
Yeah.
So what happens is that we have to produce the regular loan. You have to produce your tax returns, W-2s, and all that. Now, with self-employed people, most of the time they really know how to handle their taxes, avail of the loopholes, and all that. So the net income usually is not up to par to what they are actually cash flowing. And so we have a number of these programs that will allow them to become homeowners. One of which is presenting the 12 months bank statements. And what that does is we will average out their cash flow for the next 12 months. That comes up with the income, their average income of what they make. And based on that, we could determine what their debt to income ratios are. And usually, believe it or not, they do qualify for a lot more than they ever thought they would.
Well, that's awesome. Now, I know in some cases you need to provide a P&L.
Yes.
I know that personally, I don't know that I really have a P&L. I know what my income is. I know what my expenses are.
You're right.
But I've never put together a P&L statement.
Okay.
What happens next?
And that's where your CPA, your tax preparer, comes in.
Okay.
So you'd have to talk to them because they do your tax returns, I'm sure. And why use a P&L compared to 12 months bank statements? Because there are some businesses or there's some other situations that self-employed folks do not constantly deposit, whatever income is coming in into their bank. But these are for folks where, let's say you have a bank statement for the last 12 months has a balance of about 500,000 to $1 million, but you do have income coming here, there, and everywhere. And so what you'd like to do is present us with a letter from your tax preparer stating that, listen, you know what, you've been self-employed for at least over 2 years, and for your tax preparer to look into your cash flow, your income versus expenses, and come up with your profit and loss statement year to date. And usually when we say year to date, it's not like January 1st of 2026 to this month, which today, May 2026. Year to date means the last 12 months. So
right, from May back.
From May back, as long as you complete 1 year profit and loss statement. And basically that's enough for us to determine exactly what your income will be, how much your down payment it may be required. And of course, the credit score has a lot to do with it as well. So for these programs, we require at least a minimum credit score of 680. There are some banks that will allow 660, but definitely you're going to take a hit on the rate and the cost.
Got it. So you had a story about somebody who does swap meets.
Yes.
That was an interesting story. Could you share that?
Yeah, absolutely. So we also do what you call home equity loans for the self-employed. And the situation was he needed $400,000. And he has a home with a $300,000 loan balance at a rate of about 3%. Now, that's a great rate to even refinance out of.
Yes, and don't expect to see that again, everybody.
Yes, that was a one-time thing. Who knows? There might be something in the future, but not in the long future. So what he does is actually a self-employed person. He does a lot of swap meets, 3 different locations. And he does very good cash flow with his deposits. So we were able to get him a second loan of $400,000. And the way we compute that is we use the balance of his first loan, and the second loan should not exceed, a total loan amount of 75% the combined loan to value. When we say combined loan to value or CLTV, that means we include the balance of the first loan and how much you can get out of your second loan. So we determined that to be about $400,000 for him. So we were able to get that loan for him at a fixed rate, 30-year fix. Of course, don't expect a really great rate like your normal HELOC loans on your primary residence. But he did get a very decent rate with that at about 8.25% interest rate, 30 years fixed, and that's the second loan.
Now, just to remind everybody, I'm going to turn it around to me. Just to remind everybody, Jonathan does FHA, VA, and conventional loans for the W-2 earners as well. Mm-hmm. So anyone who's looking to get a loan, today's a Wild Wednesday, so don't think that it's not normal here, but it's a Wild Wednesday, and Jonathan be more than happy to talk to you, to sit down with you and go over the different kind of loan programs that would work for you in your specific need. So if you need Jonathan's information, contact me, send me a message below. Carol Gillis with Fredericks Realty, 310-864-9738. And he'll help you out. So thanks, Jonathan.
You're very welcome.
And we'll talk again soon.
Absolutely.
Bye.